About 3 economic reports have been released over the last 1 week, talking about sub-Saharan Africa and the revision of the growth rate expected for 2015 with outlook for 2016. There are also reports about the state of the currencies of Nigeria, Ghana, Kenya, and Tanzania. So we're taking a look at some of this now. Let's give you a snapshot of what Renaissance Capital has been released to the market. In case you missed it, this is the story. In the main, low commodity prices, soft global demand, and domestic structural constraints were the 3 pillars affecting growth across sub-Saharan Africa, especially the big countries, Kenya, for example, where the growth forecast now being revised from 6% to 5.2% because of those rapid hike in interest rate. 300 basis points has been done so far. Nigeria also faces a lot of headwinds when it comes to its economy, the policy issues there for the country, supply side versus demand. Now, according to RENCAP, the Renaissance Capital, Nigeria's growth for 2015 has been revised backwards from 4.5% down to 3.4%. But currency is always a major issue. So look at the currencies watch now for 3 of Africa's largest economies, 2 in the West, 1 in the East. For the Kenyan shilling, that's the KSH there, especially vulnerable, according to RENCAP report released a few days ago. That currency is said to be up 20% overvalued. For the Nigerian currency, we've seen about 20% overvaluation, according to the RENCAP report. There's a limited policy space for the Naira to get healthier, and that currency may fall 18% in the next 6 to 12 months. The forecast was 230 at the parallel market. That has since bottomed out. Then for the Ghanaian cedi, the report says that currency is currently undervalued as Ghana concludes a new financial relationship with the International Monetary Fund, and that currency is now turning north, gaining massively after losing very rapidly, more than 20% in the last 1 year. The upside risk is there for the cedi and expectations for a swift appreciation. But why are some of these currencies vulnerable? Bismarck Rwani is the CEO at Financial Derivatives and is joining us via Skype here in Lagos.
Good morning, Wilson.
Okay, thank you very much. I'm sure you look at those very snapshots. Give us a sense of where we're coming from.
Well, these are difficult times for the Nigerian and sub-Saharan African economies because we are all commodity dependent. Nigeria in particular because oil in addition to other commodities. But what we are seeing is that in Kenya, for example, Ghana and Nigeria, we have different stories. The theme in Ghana is that the Ghanaian cedi is undervalued, and we've seen a 22% appreciation in that currency in the last 1 week. Whilst in Nigeria and Kenya, we have seen the 20% overvaluation, as said by RENCAP, is putting pressure on the parallel market. In Kenya, we expect that to actually depreciate by about almost 7 or 8%. But in Nigeria, the question of the depreciation of the currency is dependent to a large extent on the subsidy regime. If you take out subsidies, the currency is not going to depreciate as much as projected. But if you leave the subsidies untouched and you do not rein in the imports, you are going to find the currency is going to come under additional pressure. And that is the story that Nigeria is facing. Today at $57 a barrel, Nigeria is under pressure in terms of its revenue profile.
To talk to us a little bit about Nigeria, this is an essentially Nigerian show, so let's bring it in. A few domestic issues similar between Ghana, Nigeria, and Kenya, that's inflation. And the second has to do with interest rates.
Well, inflation in Kenya has gone up to 7.03%, and that has prompted a 300 basis point increase in interest rates. In Nigeria, the inflation rate has gone to 9.2%. It is above the upper limit of the central bank. But however, because our monetary policy rate is 13%, there's limited room to increase interest rates anymore in Nigeria. If anything, we expect interest rates to come down. The only way interest rates can come down in Nigeria is if you allow the currency to find its true value. Allowing the currency to find its true value means that you have to allow it to depreciate somewhat from the current 199 in the interbank market to maybe something like 205, 210. But if you do that, then you can allow interest rates to come down. Is it politically expedient? Is it politically acceptable to allow the interest rates to come down? That is why we think that a reduction, a removal of subsidies gives the fiscal room for the monetary policy to allow the currency to ease a little bit, but not as much as the 250 and 230 that is being projected by Renka. A 230 naira official rate, IFM rate, will spell disaster for inflation in Nigeria right now.
Put all this together for us, Mr. Ruwade. How do you think Godwin Emefiele would go? What road do you think he would travel on July 23 and 24?
Godwin Emefiele's central bank is going to respond and reinforce fiscal policy in Nigeria. Monetary policy is for stability, while fiscal policy is for stimulating and growing. So what is going to happen is that if you take away the subsidy and block the leakages, the central bank doesn't have that much to do. The adjustment required will be minimal. But if you do not do that and the fiscal imbalances continue, then the central bank will have no choice but either tighten the monetary policy by increasing interest rates, or alternatively allowing the exchange rate to find its true value, or a combination of both. Right now, the Monetary Policy Committee is going to wait and see exactly what is going to happen in the fiscal space. The President has said he is still studying the subsidy issue. That means that the options open to the Central Bank and the Monetary Policy Committee next week are pretty limited. So what are we going to see? We are going to see more tightening, more administrative controls, and the currency, the disparity between the official rate and the unofficial rate, which today is between 199 and 241, 242, you are going to see that probably widen some more, and that will create fiscal imbalances, create money distortion to allocation of resources, and it's very unhealthy for the economy.
I was just about to say that this is a lot of hair-scratching time for business leaders. You hold the Lagos Business School breakfast meeting all the time. In the last 2 days, you've had some meetings with some investors from South Africa with the banking space and what have you. Talk to us about they are looking into Nigeria and how this fiscal headwind with monetary policies trying to go through a tailwind here, colliding together, putting businesses in a state of uncertainty.
Yeah, you hit the nail right on the head. The word is uncertainty. You have to price uncertainty into the market. The truth is that everybody at the Rand Merchant Bank breakfast session, it was clear that whether we like it or not, either we do it now or we do it later, we are going to have to come to terms with the subsidy issue. We have to solve that structural problem, which has now been abused and corrupted. What we're trying to do is to stop the corruption, which is a symptom of a much more fundamental problem. When we come to terms with that, then the market will price in the advantage of this policy. What has happened in Ghana, for example, is that because the policies are right, you saw an appreciation of the currency by 22% in 1 week. Imagine that if you did that in Nigeria, you might see a massive appreciation of the currency because of that. This is what you have to do, the right thing. If you don't do it, the market will wait for you and continue waiting for you until they see a pattern of doing the right thing. The laws of economics are like the laws of gravity in physics. It is not open to any imagination. It is not open to you. If you delay it, you're only going to worsen the situation. We call that incrementalism and complacency. What is happening is that people are always afraid to make the hard choices. And the time to do it is now. You have the political capital, you have the environment, you've got to deal with the subsidy issue frontally at this time. When you do that, the exchange rate adjustment required in Nigeria is going to be minimum. This is the truth, and it's only a question of time. If we don't do it now, I can assure you that by October, November, the facts will be before us, and we will do it at that time.
Okay, I put it in for us in the oil sector, which is our main energy driver. Iran is back in the equation, and then we'll have to deal with the subsidy issue on one hand. We have to deal with oil theft. We have to deal with all these perennial issues, as it were, that the president has right now on his inbox, getting a lot heavier every day. How do you think President Buhari should proceed very quickly?
The good news is that if the price of oil comes down because of the Iranian deal, the price of fuel at the pump will also come down. In fact, at that time, there will be no subsidy at all. So that will be the best time to remove it. But the reality is that at the session yesterday, it was proven that the fiscal break-even point for Nigeria, where fiscal revenues be equal to fiscal expenditure on a modest scale, is about $65 a barrel. And we are at 57. Will it get back to 65? It will get back to 65 sometime later this year or next year. So Nigeria can easily break even. So there's no need for the panic situation. But at the same time, you need to develop, and therefore the trade-offs are simple. Buhari has to deal with security, which is dealing with, you can see the service chiefs have been changed. He has to deal with a Marshall Plan to invest in the Northeast and North Central. And he has to deal with reforming the oil sector and stopping corruption. The reform of the oil sector has two options. One is reforming the sector and its organization, dealing with corruption, which you have to do, but also changing the structure, which allows for proper pricing. In that case, people will then invest in the sector. And that is, it's a simple thing. As far as what we know, it's only a question of time. Nobody's going to put the president under pressure to be on a stampede, but he has to deal with it, come frontally ahead against the subsidy issue. That is costing us over 1 trillion naira a year. Even if you cut the corruption and all that, it will come down to 500 billion naira a year. But if you take it away, rehabilitate the pipelines and the depots and all of that, you'll be able to actually send a signal. The investments that will come in will more than make up for the shortfall in the oil price. So because you will have investment inflows backed up by the oil production inflows, and that will give Nigeria the wherewithal to face the current issues that we face in our external imbalances.
Okay, Mr. Rwani, I'm just going to, we got about less than 10, 20 seconds to wrap up the show. I'm just going to ask this question very quickly. Now, is Africa rising slowing down? Yes or no?
Slowing down, but only temporarily. I think that the commodity cycle will come back by the end of this year. If you look at all the variables, in 2016, there's a point of inflection. Even for Nigeria, for the rest of Africa, and especially Nigeria, 2016 is going to be much better than 2015.
All right, thank you very much. We're going to hold on to that. Thank you very much for your time today. Bismarck Rwani, the CEO at Financial Derivatives Company, data partner for commodities market.